Dear students and working accountants, welcome to my Export Tally YouTube channel. My name is Voucherws from Hyderabad. Today in this video, we are going to discuss about one voucher type which is left yesterday for the journal, and then there are two problems covering all the vouchers. So one problem I work out here, and the other problem, and also the same which I work out here, the same problem, another problem also you try for yourself. Okay, so I am sharing the screen. You see here. In this case, so this is the company. Okay, so here yesterday we completed how to record the transactions in all the vouchers, contract, payment, receipt, sales, purchases, and then purchase returns, debit note, and sales returns, credit note. We discussed, but we left over only one voucher, journal. So in these three cases, there are two more single entry. We learned how to record. In the case of sales, purchases, sales returns, advertisement, there are two types. They are called as single entry and double entry, but single entry is single entry, double entry. Double entry is shown as voucher. So as voucher means debit credit. Okay. And then double entry, this is one, and the single entry is shown as accounting invoice, because purchase and sales deals with invoice. That is why these are all only purely accounting entries, and this purchase and sales invoice are related to invoices. So here, give the for the services as well as the details of the goods. That is, different types of goods means different stock items. The stock items are known, then total amount is taken as goods purchased. So purchase or sales. So purchase or sale of goods, purchase and sale of goods and services. You will record here. For services, we have to use only accounting invoice, that is single entry. Accounting invoice only we have to use. For goods and services, also you can use both, but for goods and services only accounting invoice. For goods, accounting invoice. For goods, we can use both. But for goods also, use double entry as voucher. So in the double entry, we can record now. If we don't know the details of the goods, we can use the double entry. But laterwards, onwards, after some next in the next steps, it will be a problem. That is why in the case of purchase and sales, so here double entry or single entry, but in the case of purchase and sales, we use only accounting invoice. For goods also, for services, it is must. For goods, we can use both, but for goods also, we use accounting invoice if you don't know the details of the goods. That we learned yesterday, and including this debit note, credit note. But debit note, credit note, credit note means only there will be goods. So if the details are not known, accounting invoice. If the details are not known for sales and purchases as well as and returns also, we use another type, the third one, the first one on the top, item invoice. That is the item, the different item names will be available. Then we have to take here item number, item name of item, and we will record all the item names, and here quantity will be there, item name, quantity, rate, and rupees. And here now in the case of accounting invoice, we are using purchase and sale account here total. So that also will go up. Party name, and below that purchase ledger, sales ledger also. We will have both the accounts. Separately we have to take up two accounts. So both the accounts ledgers will be recorded on the top. Under the inside the voucher, we record the details of goods or stock items. That is why you have to select item invoice. Then it will not show particular, it will show name of item and quantity, rate, because different items means what is the quantity here. Total we are purchasing, you won't write any quantity because there are different types of goods and we don't know the details. So different goods in different types, different quantities. So we don't take quantity. Totally what is the amount? Total purchases what is the amount we pay. Okay, this we have. And one we left us, one we left is journal. So what is journal means? All the transactions which can be recorded in all these eight. All the eight, the 6 plus 2, all these eight, which cannot be recorded is 7, and we record in the journal. So for these three, there is double entry, single entry. For these three, 2 double entry, single entry by the sales and purchase of services as well as services. Only double entry, I mean single entry, that is called as accounting invoice. For goods, there 2 are available, single and double. So we for that also we use only single entry because we don't know the details of the goods. So single entry, that is accounting invoice. For journal, only double entry is available for journal. See here, for changing the mode to double entry to single entry, it is invalid. That is disabled. That is not available. For journal, we have to record only under double entry method. So what are the transactions? So all the transactions not recorded in this. For example, when you purchase goods, we enter here. The sale purchase goods, we enter the purchase voucher. When you sell the goods, we enter in the sales voucher. For goods, whether it is goods or services. Okay, whether it is goods or services, as well as whether it is cash transaction and credit transaction, we enter here only. But if you purchase not goods, if you purchase or sell any asset, purchase or sell any asset, then the sales and purchase ledger, purchase voucher, we cannot enter only for goods or services. So other assets, we cannot enter in the sales or purchases. So here, in that case, cannot record in this, but why to record is, if it is a cash transaction, that is purchase of asset or sale of asset for cash, so we will enter the payment and receipt. Purchase of asset, make the payment, we will enter the payment voucher, purchase of asset. And the sale of asset, so we will get the money, so we will enter the receipt voucher for the sale of asset, any asset. But if the asset is purchased on credit or sold on credit, so it cannot be entered in the purchase or sale. It is only for goods. So then asset we cannot enter. And we are sold on credit or purchased on credit, means we are not receiving cash or making payment. In such a case, we are entering the journal only. In the journal only. So journal, for example, if you in the journal, if you purchase furniture, for example, so what you will write? Debit. In the case of goods, debit goods. The furniture means asset. Asset is coming in. We have to debit the asset, and the credit we have to enter the supplier. That is from where we are purchasing the asset on goods. I mean, sorry, asset on credit. So debit the asset. So we will take up here. So we will create here, for example, computer. For example, computer. We purchase computer. So it is called, it comes out of the group fixed asset. So we entered in the fixed asset. So we purchased for computer 25,000. So debit and credit. So who is the giver? Purchasing on credit? So who is the giver? So we'll take something Ramana Computer Shop. Ramana Computer. So Ramana Computers were purchased from, but that account is not there. So all see Ramana Computers. From Ramana Computers is purchased. So when you are purchasing is a creditor. The goods are asset. When you are purchasing and sold, the other person will be debtor and creditor. So is a sundry creditor. When you are purchasing, is a sundry creditor. So here address, state, okay, address, state, and we'll do that. This is very important. PIN code is very important. Accept. Okay, so 25,000. Here we are type the computer purchased. Purchase is enough. Purchase, or you can write on credit. Purchase on credit. For example, we have old furniture. We sold the old furniture for cash. So we get the money. We will enter the receipt voucher, receipt cash, and here what we sold, what is going out, cash we are receiving. So what is going out? What is going out? The furniture is going out. That will write. But here now we are selling we are selling in selling for on credit. So in such a case, we are entering the journal. So selling the furniture, old furniture, it may be okay. We cannot enter in the sales. It is not goods, and we are not receiving cash. It is not a counter. So in the journal, we have right. Debit means when you are selling the asset, so other person is receiver. So for example, one private person, Raghava, for example. So we are selling to Raghava. He will be a salary debtor. He will be a salary debtor. And we get all the details, accept. So with the Raghava is the debtor. For example, old furniture, we are selling for 2,500 rupees. And then again the same debit is showing. You have to click C. If you type C, it will become credit. Credit. So here Raghava is the receiver. What are selling? Furniture. Old or new, we won't write. You can write the old furniture we are selling in the narration. Here only furniture. So furniture account is not there. So C, furniture. Actually, furniture account will be there because unless you purchase, we have the furniture, we cannot sell. That's why the account will be there. But in case we have I may not show the purchase. So here, furniture is also fixed asset. So here, so we are selling the fixed asset. So what you write? Here we can write old because it is old we sold. Old furniture sold on credit. Old furniture sold on credit. Like that we will write. The asset purchased or sold on credit. Cash means it comes under payment or receipt. It is not goods, no for sales and purchase were paid. And another one, for example, we received a check from, see, Ramu we sold. We sold to Ramu. The Ramu is a debtor. We sold goods to Ramu. He paid check, he paid to us by check. He paid to us by check. So when you receive the check, we enter the receipt voucher. In the receipt voucher, we will enter the check we received. He will deposit the bank. So we will debit the bank account received. Receiver will be the bank because we are depositing the bank. We will check the right. We will debit the bank account. We will debit the bank account and credit the giver. The raw account is credited. So bank account is debited. Now, so that is entered in the receipt voucher. Suppose if the check is returned to us, then very happy because many people what they do is when the check is received, we are entering in the receipt voucher, isn't it? So if the check is returned, what they do, they enter in the payment voucher. We are not making any payment to the person. When the check is returned, so he is a debtor, he paid the amount by check, so his account balance is closed and it is in the bank. When the bank returns the check and the amount is not paid, then what he will become a debtor again, isn't it? That is why, so we have to, when the bank is debited, his account is credited, is given, bank is debited, deposited bank. Now we have to reverse that. Bank account is to be credited, he is a debtor and closed, and now again he will become a debtor. So that is to be entered in the journal only. It is to be entered in the journal. So debit, who is the debit? The person from whom we received the check. That is credited. Now his account is to be debited. He will become debtor again. Ram account is debit. For example, check is 5,000, isn't it? And here credit. So what you have to credit? See here, when you receive the check, we deposited in the bank. So bank account is debited when you deposited. Okay. Now it is written means bank account is to be credited. So here, in case of journal, cash and bank accounts will not be visible. So cash and bank accounts cannot be entered. So payment, cash will enter in the payment in cash or by check, we enter in the payment now. When you receive cash or receive by check, we enter in the receipt voucher. But the journal, only non-cash transactions will be entered. So cash or bank will not be visible. But sometimes we have to enter some cash or bank in journal also. Now here, say, Ram account is to be debited and the bank account is to be credited because we cannot enter the payment account. Payment account means we can enter cash or bank. But here, This is not a payment. Many people do that mistake here. So in the journal, if you want cash or bank to enter, but it will not be visible, but we can make it visible. So here, go to the up. See, in this case, show more. If you select it and click and enter, or if you double click that, in this case, the cash and the bank will be available. So when you receive the deposit in State Bank is debited. Now State Bank is to be credited, and now his account is closed. Again, he becomes debtor, so his account is debited. Okay. Now, here in this case, so when you issue the check, deposited in the bank, that is returned. So we have to give the name of the check, 1, 2, 3, 5, 6, 3, something. Whatever check is deposited, issued and deposited, because his account is closed, balance is completed. Balance is that you paid the amount, so the balance is closed. When the check is bounced or dishonored, again you will become a debtor. And later you may give another check, or you may pay cash, or till that time you will be a debtor. Okay. Now here what you write? The check bounced unpaid, bounced unpaid or dishonored or returned unpaid. Change of check, bounced or returned unpaid. So like that at the end. So this is the version, and some other versions also from one account, transfer from one account to another account. Is a check. So we cannot complete any other voucher. So then general only. For example, when you are transferring from one account to another account, the account from which you are transferring, so the balance on which side? So on the other side of the balance we have to enter, because there is a debit balance in one account that is transferred to another account. So that account is to be credited and the other account is to be debited. So this transfer entries we have to enter. So all this many entries will be you will get in the later course. Okay. So not only these two and many entries. Okay, many entries like transfer entries, adjustment entries, then closing entries means the balance sheet at the end of the year, all the nominal accounts are shown in the profit and loss account. Profit and loss account is an account, so it is having debit and credit. So double entry rules are applicable. So then when you are showing the expenses on the debit side of the profit and loss account, so the expenses accounts balances are shown there. They are transferred to profit and loss account. In such a case, all the expenses show debit balance. The expenses accounts have to be credited and debit side of the profit and loss account. Profit and loss account will be debited. So profit and loss account data are to all the expenses account to be credited for individual amount and total amount will be debited to profit and loss account. So that is called as closing entry, because closing the books at the end of the year. Similarly, incomes show credit balance, so incomes accounts to be debited and the profit and loss account is to be credited. So these things you will enter. This is about the journal. Now you take up a problem. See here, there are two problems. The first problem, do one thing. The first problem, we have 12 vouchers. That is 12 transactions. First problem, I have 12 transactions. You take these 12 transactions. This is the CD. This is the first page. So you pause the video, you can see the problem, and this is the second page. So pause the video, you can see the second page. I will do the second problem. So in the second problem, this is the first page, and then this is the second page. So pause this. I worked out here now, but still you also again you work out. Okay. So I will take up the second problem. So here, the second problem I am taking up here. See, Raja create a company with name Raja Trading Co. Hello, and record the transactions. So we have to create a company. How you create? Already we are in gateway of Tally. Or suppose when you open the Tally, directly you will be select company page. If you are here, you have to click this company, create company. You have to click here. Or if you are in the now we are in the gateway of Tally, then you have to click here. Take the first option, create. So here, what is the name? What is the name of the company? Raja Trading Company in Indore. So, okay, Raja Trading Co. Indore. So, two, and here we write the full address. That address is not given. So, we write at Trunk Road, Indore, or I will write see, Trunk Road, Nellore. Okay, like this will be the address, and the state will select that is Andhra Pradesh. So you have to take Andhra Pradesh. Nellore means Andhra Pradesh. The company is in Andhra Pradesh. Nellore. So take Andhra Pradesh and 524660 or 524021. Okay, like this you take, and after that the dates everything is same. You need not come to the end. So till the end you cannot press the enter, accept the end. Here itself you can save Control A. If you click Control A, it is saved, and you will go to the company features. A new company will go to company features. So this second one, now we make only accounting vouchers. So only maintain accounts will keep. Others, no, we will make no, and inventory we are not maintaining. We are not using inventory. So make this also no, and the GST also we are not enabled. So make all this no. Only accounting entries we are making. Then it is never useful. We never use it. So make it no problem. And make it yes, no problem. So Control A, accept. So the company is created now. Now we will go to the transaction here. For this, first component, 1st April, 2nd April, 1st May, 2nd May, and 31st May is also given. Okay, here dates are not given. So what I do is here. I will also take May because in April we have made some entries here. So no, is there new country? No. Okay. Here I will take up this is April and May are given. Here I will take up only May. 1st, 2nd, 31st. Similarly, here April and May. I will take up only May month or April month I will take. April means only 1st and 2nd. Half of the transactions I will take April month, first day and 2nd day. So the first one, started business. So started business with capital means, so he is bringing capital into the business. So what he is bringing now, we go to vouchers. Okay, we'll go to all the required vouchers, ledgers. No ledgers are created, but here what we do is all the ledgers we create in the secondary method, means during the voucher entry by clicking RTC or clicking the create button in the list of ledgers. Okay, yeah. Business is started with 80,000. Only cash means what we will do, what we can do is we are receiving the voucher we enter. We are receiving the capital, so we will enter in the receipt voucher. So we will enter in the year after. We enter in single entry only is very easy. So cash or bank you will take, the other account you will take. Otherwise, if you take the double entry, you have to take. Sometimes start with credit. That receipt will start with credit, but payment will start with debit, and the contra will start with credit, and the credit debit you will get confused. That is why if you take the single entry, no problem, no debit and credit here. Account, payment or receipt, cash or bank, and then the other account, how person or income, person or expense. So here we will take up. So in the case of only cash, we will take receipt entry. And then here, not only this cash, along with cash, you drop cash, furniture, computer. In this case, for cash, you have to enter in the receipt voucher. For computer, furniture and computer, you cannot enter in any other voucher. But where you can enter, you cannot enter in any other voucher. You are not purchasing. The furniture and computers come into this as capital. We are not purchasing, we are not making any payments. So it cannot be entered anywhere. We are in the journal only. In the journal, we have to enter only these two we can enter. So one transaction, we have to make two entries. One for cash, we have to make in the receipt entry. For these two, we have to make entry in the journal. Instead of that, one single transaction. So we can write, we can enter the what you call as compound entry. So in the case of compound entry, where you have to enter In cash, we cannot enter. Receipt or payment, we cannot enter these two. But these two can be entered in the, we have to enter in the journal. So this also can be entered in journal. So in this case, we have to go to journal. In the journal, I told you already, in the journal, see here, in the journal, cash or bank will not be available. Okay. And in the journal, so we have to debit cash coming in. Cash debit in the journal, only double entry. So cash debit, furniture debit, computer debit. Okay. So here, so I will create now. I will create. So that will actually, even if it is already created, it will not be visible. Okay. See, I will show you. But in the beginning itself, we will see here. Cash is there already, isn't it? We will take bank also. State Bank of India comes under bank accounts and all the okay. So bank. So cash and bank available. Cash is default ledger and State Bank will be open. So again, if you go to voucher, if you go to journal, see cash as well as bank, they are not visible. So cash is about 60,000. All the cash and all assets has to be debited. Cash is debited. No, cash is not visible. The others we can create now. Furniture and computer we can create, but cash is already created. Now it is not visible or bank. So in this case, in the journal, if you want to enter cash or bank along with others, only cash or bank you cannot enter. We have to go to payment or receipt voucher. If the cash or bank alone, here cash is there and other assets are there, all have to be entered. In this case, to view the cash or bank, so you see here, go to, actually in the journal they are not visible. We will not enter here. But here now we have to enter along with other assets also. So then click show more, double click or select and enter. So here cash bank are visible. So we will take cash 80,000 rupees. Okay. Again, after debit, you should credit. Again, click D. Debit, click D. Okay. Then furniture 50,000. Furniture account is not there. So furniture, it is fixed. The previous we made a journal that we made in some other company existing yesterday's company. This is a new company we created, so they are not available here. So we created furniture 50,000. Furniture 50,000. Again, it's showing after debit, it's showing. Again D. So here D. Again computer. So create this also. Computer. So it is also fixed asset. Accept. What is the amount? Computer 25,000. The total amount we received towards capital. So now we have to create capital is not available. C. Capital comes under capital account. So it is created. Total amount is 1,55,000. So if you come down, what you will do is here. This total amount is got, all the assets are got as capital. So the capital brought into business or capital introduced. Being capital, what are the different assets? List is there. So being capital introduced, that we will write. Then open a bank account with State Bank of India. Now we open a bank account with State Bank of India. Please deposit cash. When you deposit cash in bank, we are entering the contra, cash to bank, bank to bank. Go to contra, and in the contra, all these will enter the W2. Here, in this contra, you must be careful. So when you are depositing in the bank, so bank account is to be entered. So we have State Bank of India. So here, nothing is shown here. So click what you do. You click bank means yes. If you click yes, it will be visible. Otherwise, you click space bar. So in this case, for contra, cash or bank is there. We have to take bank. So State Bank of India, and here we are paying cash. How much you are paying? So he received 80,000. So he's showing 80,000. Out of that 25,000. State Bank of India will pay 25,000. So 25,000 cash. So this is single entry. Single entry no. So this is one entry we are making here. The same will be true for this also. So here what we did. So here in the case of bank transaction. So when you are depositing in the bank, you deposit cash. Then it will ask you transaction type cash, and it will ask you the denomination. In all other cases, depositing check from others, depositing the check or receiving the check from others. Okay, and withdrawing from bank, everything we use check. When you are depositing, you will deposit cash. When you are withdrawing, you have to give the check and withdraw the cash. Okay, that's it. In this, that will show type of transaction did check the other cases. In this case, it is cash. Ask the denominator. 25 means 5,000 into 50. 25,000. So then 50, 500 into 50, 25,000. And here bank name is not required. Our bank only. And being cash deposited in bank. Being SBI bank not necessary, deposited in bank. So bank is, I mean, the amount is deposited. Okay. So it is accepted now. And then paid salary to Radhika and Raghu 5,000 and 6,000 respectively. Both are salaries only. And in the case of salaries, the persons are not, personal accounts are not required. Paying salary means cash is paid. So two salaries, we enter the total amount. One now, so account is the same salaries. So payment we are making. So I have to go to payment. What you are making payment? Cash we are paying. We are paying cash and we are paying personal accounts are not required. We are paying salary. So here we have to pay. Why you are paying or to whom we are paying? Paying expense or to person. So we are paying expense. So here, if this case for click, salary account is not there. So we are paying salaries. Salaries, it comes under. So for the company, it is expense. It is indirect, not related to company factory. So indirect expense, you don't ever take the indirect in bracket. Don't take them. You take this also. Incomes, the direct expenses, indirect expenses, direct incomes, indirect incomes. Don't take these two brackets. So indirect expenses, accept. So how much salaries we paid? Totally salary, 5,000, 6,500, 11,500 rupees we paid. So the salary is paid. That's all. The salary is paid. And then, and we can write also on the thing. Being salary is paid to Radhika and Raghu. Paid to Radhika and Raghu. Okay, it's not required actually. And then salary. Paid commission to Raghu by check. So whatever expense we pay, personal account is not required. Raghu is not required. We paid commission by check. So in such case, what we have to enter? We have to go to payment voucher only. Payment. We are paying cash or by check. We are paying by check means we have to enter State Bank of India. We are paying cash, we have to take cash. State Bank of India. What we paid, we commission paid. So select it, create commission. In the case of expense, you can make it as commission paid or simply commission. But if you receive income, definitely you have to create commission received to show difference. Expenses separately and income separately to show that in the ledger. So for commission expenses, commission paid, you can write salaries paid, you can write or simply commission salaries means it is expense only. Because of income only, we have to mention definitely received. So commission paid, it is also indirect expense. What is the amount we paid commission? Paid commission, whatever it may be. Paid commission, bank na, paid commission 1,500. After this, here, now it is paid by check. So it will ask me the details of the. In the case of cash, it will not ask. Only in the case of payment deposit in bank, it will ask the denomination. But in other cases, it will not ask anything. But in the case of bank, it will ask you the check details instrument. So here we are paying by check. That is why. So transaction type check. That is it. Here, instrument number means check number. So 564235. 564235. That's all. Okay. Here we do what we do. Commission paid. Commission paid. Okay, what we do is the commission paid. We can write by check. For cash, we need not write anything. So for check means commission paid by check. Or simply you can write being commission paid. Or by check, it is if you want, you can write us. And then pay the electricity bill of office and go down. So electricity bill for office, electricity bill is indirect expense. Go down means go down of the stock. That means it is related to the purchase of stock, production, factory, everything. That is why go down of the rent, electricity bill or rent, anything. Expense related to go down will be direct expense. This will be indirect expense. Both are different. Here salary, only one. Salary, indirect expense. Here this is different. So we have to create different accounts and we paid them. So we have to go to the payment, and here, and here, first one is electricity bill for office. So here what we do, we are paying cash only, nothing is given. By check means bank, otherwise cash. Cash we are paying, and here we have to create. So office electricity, office electricity or electricity charges. Okay, office electricity charges. Office means indirect expenses, so it is indirect. Office electricity charges, how much? 1,500 rupees. And then second one, go down. So we have to create, go down, electricity charges. Nothing is given. Simply electricity bill is given. We take it as indirect only one account we use. Here both are given. That is the here. So go down electricity charge will be direct expenses. You have to take direct expenses. Okay. Direct expenses. Go down. See, office first one, go down second one respectively. So 1,600 rupees. That is the electricity charges for go down. But here simply we can write the electricity charges paid for office and go down. Office and or we can write or not. See, being electricity charges paid, that's all. Paid. You can write for go office and go down also, right or not. That is left to you. Okay. And then interest received from HDFC Bank. Interest received from HDFC Bank means if the HDFC Bank says it is not actually, our bank is State Bank of India. HDFC Bank means it is a different account, different bank. So when you receive interest from the bank, if they pay money to us, it is a receipt. Okay. So what we have to go to receipt will go. So here we are giving. So bank that is a different bank. They are paying to us means if they pay cash to us, what we do here? Cash we take, cash we are receiving, and what is that received? Interest is your income. So create interest received. Interest received. It is indirect income. Indirect income. So we can create like this. Okay. What is the amount? Interest is 350. Okay. For example, this is some other bank paying interest to us, paying cash and interest received. Suppose we have account in HDFC Bank also. We have account in HDFC Bank also. If you have account in HDFC Bank, it will not pay cash to us. It will transfer that amount. It will credit that amount in our account. That means it will be deposited in the account. So deposit in our account means just like deposit in bank. Bank account is receiver. So here we'll write bank account. But we don't have HDFC Bank. Take it as State Bank only. So we can, if you have HDFC Bank, we write it here. HDFC account we will have. So account HDFC Bank, interest received. And here HDFC Bank we don't have any account, I assume. So it means it is paying cash to us. We are taking cash. Okay, cash. Or simply our State Bank, if we take it as a State Bank, for example, it is State Bank, interest received from State Bank. It will not give us cash. It will enter in our account. In such a case, we select the State Bank of India. Okay. And here, see here, it is not, see, when you are giving the name of the bank, it will show the transaction type, check or DD, but actually, it is directly depositing in our account. Because I wish they to pay cash to us. If it is taken as cash, see, if we take it as cash, then it will not ask anything. It will not ask anything. So, being here, see, cash means at the total, see, when you enter the total, here, it will not ask you anything. In the case of bank only, it will ask you, if it is bank also, even if it is bank, here, it is not check or bank. What we have to do is, they will not give any check or anything. So some other, that is, directly they will credit account. So here, space bar, so here, others. So not check or DD, take others. Others, and here instrument number, we don't know. Estimate number will not be there. So for others means direct credit. So direct credit. So directly bank will credit our account. So we will take it as direct credit. And then we interest received. Received means received into our account. Okay. Received into our account. That is the thing. Then purchase goods from Swati trader. So what will go? Say purchase goods means purchase rate, purchase ledger. Here we will give 1 to 5, for example, Swati traders. We have to create Swati traders when you are purchasing sundry creditor. So we have to give all the details. So this is Andhra Pradesh. So we are giving Andhra Pradesh. Andhra Pradesh. So purchasing goods means receipt, how we received the goods, and then what it details. Then here we are purchasing goods. So that means we have to create the purchases account. Purchases means purchase ledger. Purchase ledger comes under purchase accounts. Purchases, purchase returns, purchase account group, and sales will come under sales account group. That's it. So purchases, how much you purchase? Purchase for 25,000 rupees. 25,000. Because there is no details. That's what particulars means. What is the account? Particulars means what is the ledger? The name of item means what are the details of the stock, and purchase account go on. That is different. That is under not these two. Above this, above account invoice, item invoice. So that is a different one. Then so purchases. So here we write these goods purchased. We can write as on credit also. Purchase on credit. Okay. Then sales goods, sold goods to yes enterprises. So for not only this, we have some other goods also. So to yes enterprises, we sold goods. Then where you have to enter? We have to in the sales voucher there also. So party name, what is the party name? Yes enterprises, isn't it? So the name is yes enterprises, and he is a sundry data. When you sell, the other person will give sundry data, give all the details, and I have to go. And then when you are selling means we are sending the goods. That's why it's asking dispatch details. When you purchase, receipt details. How you receive the goods. Dispatch details means how you dispatch the goods. Accept and party details. All the party details if you have, when you created the ledger, what are the details given? They will show here. Here we have sold the goods. We have to get the sales account. It comes under sales account. Sales ledger. This is sales ledger, and this is group. Sales account is the group, and here what is the amount sold? 75,000 rupees we sold. So we can write as here the goods sold or sold on credit. So we write sold on credit. Okay. And then the other one is return goods to Swati traders. Swati traders we purchase. Now we return means return to this is purchase returns. What is purchase returns? Debit note with the purchase returns. Debit note all F5. So all F5 debit note. So here we are taking the other date. Second I am taking. Okay, I am taking second, and we are sending the goods returns. The purchase returns are returns. We have to enter the original invoice when you purchase or sold. What is the invoice number? Against that invoice, the goods purchased or sold. On that invoice, we are returning. That is why we have to see the. We have to see when you purchase from Swati traders, the number is 1. And for sales also, for sales, yes, that is also 1. Okay, there is no other voucher number. So here, debit note. So to whom we return? We return to Swati traders. Already account is there. Swati traders, and here, yeah, number 1. Date is not second. Today's date it will take. So that is purchased on 1/4. That is by 1/4 and party details. And here it is called as. So previously purchase means you write purchase. Now it is purchase returns. So create that purchase returns. But purchases and purchases both come under purchase accounts. So the purchase accounts. So purchase account, the ledger will be purchase account. What is the purchase return? Return to two Swati traders 5,000 which is purchase return, and here we will write as being purchase returns we are sending. So being purchase returns sent. Then purchase machinery on credit from Padma traders. See here, when you purchase the machinery and pay cash, we will enter the payment voucher. So paid cash and the particulars will write machinery. So purchase machinery on cash. But here and we enter in the payment account. And when you purchase on credit, so where you attend sales and purchase, you can attend to this purchase for goods only. You purchase machinery asset, it is not goods. That's why you cannot enter here. And we have not paid cash. It is on credit. That in the journal only. Journal means only journal only double entry. So here purchase machinery from Padma traders. So debit. So what you purchased? Machinery. So machinery is coming in. We have to create the machinery account is not there. Or we see machinery. Machinery, it is a fixed asset. So just like furniture, the fixed asset. So I accepted. What is the machinery purchased? 55,000. 55,000. Who is the giver? So we purchased on credit. So Padma traders. So we have to create Padma traders or Padma machineries. It is a sundry credit or goods or any asset also. When you purchase and sell, data or data. So here sundry Padma traders purchased machinery. So sundry creditor. Okay, accepted. So 55,000. Here we are take the machinery purchased on credit. You can write it on credit or not. That's exactly. Okay. Machinery purchased on credit. Then received commission in cash. So we received commission. So in cash we received means we enter the receipt voucher. Okay. So how we received? Cash we received. So commission. So we have commission is there. We have commission. So commission received how much? 2,000 rupees. 2,000 rupees. And here we enter being commission received. That's all. Being commission received. And then check deposited into cash deposit into HDFC Bank. So here we have deposited cash into HDFC Bank. So we don't have HDFC Bank. Now we create because it is HDFC Bank given. We took it as State Bank only. Okay, we take it as State Bank only. So we deposited cash into State Bank, not HDFC Bank. We deposited cash into State Bank of India. So when you deposit cash, the beginning also, you opened a bank account by paying 25. Now here also, we deposited in State Bank of India. But where you enter? We enter in the contract. We deposit in the State Bank of India. Bank account is to be taken. Then we paid cash. How much? 5,000 rupees. That's all. Here we write. Here cash means we have to use the denomination. So you use that 5 means 5,000 rupees. Then being cash deposited in bank. Name is not that right. Deposited in bank. Deposited into bank. Then received check from Yes Enterprises. We sold goods. So we sold for 75. We received the total amount. We may receive some amount also. We received the total amount 75,000. So we received from Yes Enterprises because we paid. So right, received. So it's given as received check. Number is not given. Check received. So here when you receive check, you deposit in the bank. State Bank of India will take from where Yes Enterprises received. So it is the giver. This is the receiver bank. What is the amount? Total amount received. See here, 75 debit balance is a debtor. When you receive that, balance will be closed. So here, balance is 0. Suppose if we received only 50,000, we receive only 50,000, it will show 25,000 balance. So now we receive total amount. So the balance is not there. So here, what we have received by check. That is why transaction type check. So it will ask you the check number. It's not given here. We take it 1, 2, 3, 4, 5, 6. Okay. And here you write the check received on account. So he has to pay to us on that account will be being check received on account or simply being check received in the bank. And then paid to Padma traders by check. So Padma traders, we purchased machinery, total amount we paid. This is payment. So here we paid by check means State Bank of India. To whom we paid? Padma traders. What is the amount? See 55,000. All the 50,000 rupees is paid. So 55,000 rupees is paid. And here, see, we're paying cash. That's not, it is not asking. For bank only it asks. So, the cash paid on account. So, against their dues, we paid. Okay. And then, Padma traders, then paid to, oh, sorry, Padma traders, we paid by check. Sorry. So, Padma traders, we paid by check. So, we have to take State Bank of India. Take State Bank of India. We will ask you the details. Check. Check we are paying. Okay. Check we are paying by 124,578. So check number 124,578. That is a check number paid by check. We need that right. That okay. And then paid to Padma traders. Now paid to Swati traders by check. For this also payment voucher. State Bank of India, and we paid to Swati traders. We paid to Swati traders by check 20,000 rupees. So if this bank means it will ask you the bank details. Here, check it is showing already, and the instrument number we are paying 111233. So here we can write the amount paid by check. Amount paid by check. Amount paid by check. Okay, that's so these are the entries we completed. See the problem number 2. In problem number 1, only there are 12. So what you do is you can take this. You can stop the video, pause the video, see the transactions. You can make the entries in your tally, and this is the second page you can do. And this also again you try. This is the first page, and this is the next page. These are the transactions. You pause this, and you can with this stop it. So with this I'm stopping. You know how to record all the transactions in different vouchers. Is only simply accounts without any goods or taxes. Next we will start with inventory also. Okay. So please everyone subscribe my channel and click the bell icon next to the subscribe button. If you click that and select all, you will get notification for all the videos which I upload in my channel and share my channel with others. And every video, every video up to the end. Otherwise, you get only half knowledge. And if it is good, you like the video. If you like, the YouTube people, they will recommend this video to many people so that many people will learn. Okay, with this I stop this. Bye, and we'll meet in the next video. Bye.